Welcome back, students who are taking Math for Business and Finance and Math Applications. We're working on the theory videos for Chapter 18, which covers inventory and overhead. So in the last 5 videos, we had covered inventory, so now we're going to move on to the section about overhead. Realize that it's not two different, even though it is two different topics, you're going to take a portion of what you had, the knowledge from inventory, and it will apply towards the overhead. Okay. And as always, if you don't understand something in these videos, watch them again. And if you still don't understand, then feel free to contact an instructor, and we'll help you understand the material. Okay. So as we move into the overhead section here, let me scroll on down and get to the retail method. Okay. As far as overhead is concerned, we're going to, well, let me bounce back up, sorry. In our overview slide from the very first video, you saw that we had it broken down into inventory, and we covered cost of goods sold, specific ID, weighted average, and FIFO and LIFO. So now we're going to be covering in the overhead section the retail method, gross profit method, inventory turnover, and distribution of the overhead. So we're going to jump down to our retail method. Okay. And for the retail method, you need to know, what, let me get my pen. You need to know what the cost of goods available for sale are. And you learned how to get that, or you learned what that was about in the previous videos for inventory. Okay. And you learned it from the perspective of cost, but also you apply the same thing against retail. Okay, so you need to know both cost and retail. When we were looking at cost, we were talking about, here was my beginning inventory, and then these were my purchases. Okay, in order to end up with my cost of goods available for sale. Okay, well, obviously, inventory is our cost. And this idea of cost of goods available for sale at retail means that, let's say I bought a table at 100, okay, and I'm selling it for 500. Well, that's what at retail means, because this was our cost and this is our retail. So it's basically the same concept, except instead of using what our costs are, we're using the figures of what we're going to be selling things for. Okay, so you need those two figures. Okay, and the reason why you need to figure those two, figures, is because you need to create a cost ratio. Okay, so you have the ratio of the cost of goods, all right, at cost, available for sale at cost, and then you have the cost of goods available for sale at retail, and that creates a ratio. Okay, now you need that ratio, right? Because you're going to apply it against your ending inventory over here in step 4. But once you have that ratio, you're going to take the cost of goods sold at retail, not cost of goods sold, cost of goods available for sale at retail, minus your net sales. Okay. And that basically gives you an ending inventory at retail. Now, look at what we're talking about here. I mean, there's a lot of words on this screen, on this PowerPoint slide, and you keep on hearing cost of goods sold available for sale, retail minus net sales, ending inventory at retail. Okay, realize that this is all just the same exact concepts that we've covered before when we talked about cost. Okay, I mean, to keep it simple, you had your beginning inventory, and remember, we're talking about cost here, right? This is cost. beginning inventory plus your purchases, okay, gives you a cost of goods available for sale. Then you take out your ending inventory, and that gives you your cost of goods sold. Okay. Well, this is at cost. Well, for retail, it's the same exact thing, except now we're instead of considering things at cost, we're considering them at retail. Or my beginning inventory at retail. Okay. You know, what I purchase at retail, my cost of goods available for sale at retail. So it's the same thing. It's not like you're learning something new here. It's just that, you know, yeah, when you have a product, right, you either make or buy that product and it has a cost, and then you're going to sell it at retail, right? But the same thing happens in tandem, okay? So what we have here is we have that cost of goods available for sale at cost, and we have a cost of goods available for sale at retail, and that gives me a cost ratio. And remember, a ratio, I mean, you learned this way back in like chapter 2 or 3. What's a ratio? It's, you know, one number divided by another. Okay, it's that simple, right? And then you're going to take, you need to apply that ratio against your ending inventory at retail. Okay, so how do you find your ending inventory? Well, you take your cost of goods available for sale at retail minus your net sales. Okay. Remember, net sales are, you know, your gross sales less your sales returns and allowances less your sales discounts. That gives you a net sales. You learned this in a previous chapter. It's not like this is new information. Okay, so if I have my available, okay, which means my inventory plus purchases, okay, so that's going to give me this big amount, and then I'm going to take out what I actually sold, right? That's my net sales, okay, and what I have left over should be my ending inventory, okay? And we apply that, we take that ending inventory and we multiply it by the cost ratio, okay, and that's what the retail method is all about. Now, that's in order to be able to estimate my ending inventory, because remember, we're talking about this from a retail perspective. When we're talking about inventory, we're talking about our cost, right? Right. Inventory, I should have written that differently. Inventory, you know, is at our cost. Well, if we have the retail figures, by creating the cost ratio, okay, by creating the cost ratio, we can apply that cost ratio against our retail in order to figure out what our inventory is at cost. Okay? And so that's what the retail method is all about, right? From a theory perspective. Now, I didn't go and do a lot of math here, because you can, you know, follow the math along in the textbook, and of course you're going to have drill problems. But I did want to cover the thought process behind how to do the retail method, okay? And in the next video, we are going to cover the gross profit method, okay? And then after that, you know, we'll cover other things. So, you know, if you didn't understand something about this retail method and the thought process behind it, okay, it's not that difficult. It's stuff that you already know. It's just different wording, and it's just arranged a little bit differently, because we're trying to sit there and go, well, you know, if I know my retail, well, how do I know what my cost is? You know, how much do I know what my inventory is? well, you're able to figure that out through the retail method. So if you don't understand something, watch the video again. And if you still don't understand, contact an instructor. Okay, and I'll see you in the next video for the gross profit method.